Ladies and gentlemen, welcome to this special interview. Today we have a returning guest to the show, Simon Popple of the Brookville Capital Intelligence Report, located at brookvillecapital.com. And I got to tell you, big news has been breaking in gold and the gold mining sector, and we need someone like Simon to come help us unpack it, and that's exactly what we're going to do today. Simon, I'd like to thank you for joining us again on Silver Doctors.
Great to be here.
Now, Simon, big news in gold and the gold mining sector. You know, Warren Buffett, this investor, Warren Buffett has been known to be anti-gold, and I'm going to get into one of his quotes in a little bit, but, you know, Berkshire Hathaway. So we can kind of use the term interchangeably when we talk about Berkshire Hathaway or Warren Buffett, but, you know, they made a huge purchase here just in the last week that was reported on their 13F filing. Well, in the last quarter, actually. So could you just explain, what did Berkshire Hathaway, what did Warren Buffett do with this gold purchase? Did they buy gold? Did they buy gold miners? And just to open it up with that in starting dialogue, what does this mean for gold and the gold miners, Simon?
Well, I think it's a huge move. The old term, action speaks louder than words. As you know, he's been fairly derogatory about gold in the past. So, my understanding is that he's dramatically reduced his position in airlines and banks, and I think he's out of Goldman's completely, according to his last report. He's made a large investment into Barrick. Barrick is, is a gold miner essentially, obviously mines other stuff as well, but, that would sort of, it's a bit of a sea change really, because not only is that, as far as I'm concerned, a bit of a tactical shift in terms of what Berkshire Hathaway are doing, but it's sort of taking gold into the, the more mainstream type investor. If Warren Buffett's doing it, I think others will follow.
Mm-hmm. Yes, and I would agree with that. And I would like to say that, to me, in my mind, it's interesting because, it's kind of like it's, yes, he's got the first mover advantage in that sense, but in another sense, it's kind of like, making it like a green light for the institutions here, because, for example, if he's buying gold and the gold miners, then other institutions can say, well, if Berkshire Hathaway, if Warren Buffett is making this investment into the gold and the gold miners, then other institutions are going to say, then we can follow that lead, right? Because that's what the smart money is doing. So, to me, in my mind, it's kind of like when Blu-ray came out. For a while, it was it HD DVD or was it Blu-ray? And then slowly companies started moving towards Blu-ray. And then that's what ended up being the successor. Or way back in the day with VHS and Beta, companies started adopting VHS, and that's what became the standard. So it's kind of like, well, now we're seeing the really big, really smart money coming into gold in the gold mining sector. So it's kind of setting the stage for the other institutions to follow. Am I thinking about that anyway logically at all there, Simon?
Yeah, no, completely. I mean, I don't think anyone's going to get fired for following Warren Buffett's, strategic investment philosophy. So, I think it's going to open the door to more institutional investment, which, some gold miners have had some, but many haven't. And I think, on the back of that, I mean, if you look at what's happening with dividends, this side of the pond here in the UK, there was an article in the Evening Standard recently that said 49 out of 100 of the FTSE 100 companies had either slashed or stopped paying their dividends. And when furlough ends in, I think it's due to finish in sort of around October, it would be no surprise to me, if that number went up. So I think a lot of people are going to be looking for income. And, I think gold companies, I know some that have actually increased their dividend this year. So, the world is looking like there could be quite a seismic shift towards the gold miners.
Mm-hmm. And unpacking that thought just a little bit more, when we're talking about dividends and stuff, one of the things I'm thinking about is, on the one hand, it seems like, there might have been some disruptions in the first half of the year with the shutdowns and the lockdowns and the closures and this and that. But on the other hand, gold's sitting here at all-time record highs now, finally, in US dollars. So while there could have been some disruptions in the earlier half of the year, now they have the rising price of gold that can make up, and even more than make up for that disruption there in the miners. Or am I thinking about that right? How does a rising price of gold affect things? And does it mean that the miners' dividends are going up, or they can reinvest, or they can reduce debt, or what does a rising price of gold and dividends just mean in general there?
Well, I mean, I'm not sure what the opposite is of a perfect storm, but I mean, whatever it is, I think the gold miners have got at the moment, because they've got a rising gold price, which is great because that's what they're selling at. But they've also got, if you look at the oil price, I mean, the oil price is significantly lower than it used to be. And so, the energy costs are getting cheaper. So, that all points to an expanding margin. And, particularly in these challenging times, any company that is expanding its margin is doing incredibly well. So again, I think that people are looking more at the sector, and I think in a lot of cases people are looking at the sector for for the first time. And with negative rates on so many bonds, and people typically retirees looking at fixed income products, moving from equities into fixed income. I think a lot of people are looking at the gold market who never even considered it.
And when you say looking at it for the first time, let's unpack that just a little bit, Simon. And we don't need to get into specific details about certain companies or anything, but Barrick is the one that they was referenced in the purchase on the 13F. So I guess the questions are like, what kind of a gold miner is Barrick? Is that what you would call like a mid-tier, or a major, or a junior, an explorer? That's question number one. And then question number two is, what are some of the things that people are going to be looking for when it comes to the different miners in general? If that question even made sense there, Simon.
Well, I mean, first of all, Barrick is a major. I mean, it's a huge company. I mean, it used to be the world's largest until I think, the recent transaction with Goldcorp. But it's definitely a major. But I think what's going to be interesting is I think a lot of institutions will, they'll probably start off moving into the majors, but then, as those prices increase, they'll be forced to look more at the sort of the mid tiers. And
and why would they be moving into the majors first? There is, it has something to do with safety. If I think I've heard you say it before, correct, Simon?
Yeah, I mean, I think that there's an element of flight to safety, and I would never advocate anyone goes completely into one asset class, but I think quite a lot of funds have got probably no allocation to gold, and so people are thinking, well, perhaps we'll just have a small allocation, and the logical first step would be the majors, but shortly thereafter, I'm sure they'll be looking for value, and if the majors prices are spiked, they may find that there's more value in the mid tiers.
Mm-hmm. So it also sounds like this is just getting started there with the mid tiers. And then could you also talk to, the fundamental backdrop for the explorers? Because the word has been that some of the majors would also be looking to acquire some of the explorers and some of the juniors. And I guess I'm asking these questions because, from just a newbie point of view, if I could bring it with that dimension, like how do these different size companies fall in line on the investment scale like that?
No, sure. Well, I mean, in my report, I actually break them down as a sort of fantasy football team. So, the majors are the goalkeepers, mid-tier will probably be a defender, and then you've got the midfielders, which are probably new to production, and then, as you point out, the juniors would be the forwards. But I mean, typically, what happened in the last boom is, the majors got a lot of stick for essentially, the view was they were wasting capital exploring. But I think this time around, especially if they got more institutional investors, what they'll probably do is they'll buy up an explorer with a proven resource in a highly prospective area, and even if they end up paying a few $100 million for it, relative to their exploration budgets, at least they know there's a degree of certainty that there's a certain amount of gold there, and some of these guys, they've got some fantastic geologists, and even though there's no guarantees, I think there'll be if you've got a decent high grade deposit, and it's properly analysed, then I think that there'll be a degree of confidence. There could be more.
Mm-hmm. And as far as Warren Buffett goes, My understanding is that, Warren Buffett, one of the reasons that people are saying that he might have been making this move at this time is also in the fact that, he's kind of been outperformed by gold in the gold mining sector. Is that right, Simon? Like what was going on there?
Yeah, no, I mean, very interesting. I mean, I stumbled across some research a few weeks ago that showed that over the last 20 years, the gold price has actually outperformed Berkshire Hathaway, in terms of, gold price versus Berkshire Hathaway's share price. So for 20 years, that's quite a long period. I'd understand if that was just, perhaps a shorter period of time, 5, 10 years, but for 20 years, I think that's quite impressive, and I'm sure someone's pointed that out to him, and it's not lost on him. So by buying into a miner, he's not only benefiting from an uptick in the gold price, but there's a degree of leverage in there as well, due to the margin expansion.
Mm-hmm. Very interesting. And, when I'm thinking about also over the last 20 years, I'm thinking about like an index like the Dow or something. And the weird thing about that is the Dow also changes, right? Like the companies in the Dow aren't even the same companies that were in the Dow when the Dow first started. But an ounce of gold is always an ounce of gold. It's not something that changes over time. So just the stability of gold on top of that is interesting that it's outperformed Berkshire Hathaway, if that made sense at all, Simon.
No, absolutely, absolutely. I mean, I think it's very much a sort of, people are, they're looking for tangible assets, and I think that, if because gold is tangible, and obviously other commodities are as well, such as silver. I think that people really have, a lot of interest in these particular assets at the moment.
Mm-hmm. And one of the things that, if I could play devil's advocate here for a minute, people are saying as well, this is coming out because he's loaded up on all this Barrick and now he's going to sell it into the people because gold's gone as far as it can go and this and that. But gold's got so much further to go, it seems like, in my opinion. It's like, this is not the sell signal because Buffett just went in. This is like the start of something here, as opposed to the end of gold's run to 2000. Would you agree with that there, Simon?
Yeah, look, I mean, I think Warren Buffett, he's a smart guy, and he tends to buy. I wouldn't say he buys at the bottom, but it's highly unlikely he's bought at the top. And so, I'm sure he's looking to make a lot of money on his investment in Barrick before he thinks about selling. So, it'll be quite interesting to see if he's bought into any other miners when the next quarterly report comes out.
Mm-hmm. And I'm sure there's going to be all eyes on it when the next quarterly report comes out. Definitely, they're going to want to see what other names pop up on there. Now, Simon, just as far as the fundamental backdrop in general, we kind of talked about, there might be some hope that the miners are going to increase the dividends. But just as we move through summer and into fall here, like when you're looking at the miners and maybe the fundamental backdrop, what are some of the things that are on your mind as we move through the rest of 2020 here?
Yeah, well, I mean, obviously, hoping that the gold and silver prices, hold up and go north from where they are. The silver price is still, even though it's moved up significantly, it's still, way below the historic gold silver ratio. And if energy costs stay low and these metal prices increase, and we don't get much respite from the coronavirus, I think that the miners could do pretty well for the rest of this year, and certainly into next year.
Mm-hmm. And are you looking at the silver miners as well? Because, in my opinion, that's another reason why I think that the metals are closer to the start of the run than the end of the run. And what you said about Buffett certainly not buying at the top is a very valid point as well. But because silver is still, as you said, a country mile from all-time record highs. So that's also telling me that these miners and silver still have a lot more way to run here.
Absolutely. I mean, that's one of the things I really find attractive about silver, to be honest, because gold is all-time highs, or it's close to all-time highs, whereas silver's nowhere near all-time highs. I mean, I'm not sure where it is today. I think it's about $27, $28 an ounce, but it has been as high as sort of around 55. So silver's got a long way to go even to reach previous highs, and no one knows really where it's going to go from there. If gold really takes off, then the logic is that silver will follow. So yeah, no, I think also from an investment perspective, it makes sense to have a bit of diversification, not just in terms of metals, but also, you know, geography, and, you know, investing in different countries, in miners in different countries, different metals, to, you know, to make sure you've got some decent diversification.
And I would ask you, because we've spoken about this before, but I think that it's now very pertinent, as a matter of fact, because, you know, we're kind of spoiled here in the U.S. We're kind of lucky here in the U.S. because we got access to all the great different bullion coins and rounds and bars and stuff. But my understanding is that in the UK, there's like an IVA tax or an IBA or some sort of value added on tax if you're buying like gold or silver bullion. And with the rising price, and my understanding is right, that's a percentage of it. So it might make the miners more attractive in that sense, because you're not paying all those expensive excise taxes. Am I thinking about that right? Or am I not thinking about that right, Simon?
No, I mean, largely, yes. I mean, there's no VAT on buying, you know, silver coins. And that's right, well, on gold
VAT,
coins. Right?
I'm sorry, I said IV.
On silver coins, if it's a new coin, you have to pay VAT on it. If it's not a new coin, you don't. So a lot depends on, you know, where you're getting your coins from as to whether or not you're paying VAT on them. But coins are, you know, gold and silver coins are generally treated as cash, and you don't pay you don't pay capital gains tax on tax. Capital gains tax on currency. So there are some attractions to having some gold coins, but I think, you know, there's also some massive attractions to having the miners, because they are, you know, they're producing physical gold, physical silver, physical whatever it is. And I think that in this day and age of, you know, a lot of paper products, you know, people want to invest in something that is, you know, producing something tangible.
Yes, and I want to read this one quote from Warren Buffett here. Since we're talking about something tangible, he said, and this is a quote, and this is from, I think, a speech he gave in Harvard, if I remember the source right. I'll pull up a source for the links in the description below, but it says, gold gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. Now, Simon, you know, I'm thinking, you know, I like to repair computers, and more than repair them, I just generally break them. But my point is that computers have a lot of gold in them. CPUs have gold in them. Gold is used in dentistry. Gold has utility in the fact that in and of itself, it is money. Gold isn't perishable. So there's a gazillion things that gold has utility for. So I find that very interesting. You're bringing up the difference between paper assets and actual physical assets there, in conjunction with that Warren Buffett quote. Did you have anything you wanted to add on to that, Simon?
Yeah, I mean, I think the only thing I'd add to that is you can't print gold or silver. And I think with all the money printing that's been going on recently, you know, people are sort of scratching their heads a bit and saying, well, you know, I'd actually like something that, you know, is tangible. And I think that's, you know, I don't know the rationale behind, you know, what Warren Buffett is doing, but it'd be no surprise to me, you know, if he wanted to have more investments in, you know, tangible things.
Mm-hmm. And what can people get out of the Brookfield Capital Intelligence Report, Simon?
Well, I mean, what I do is I provide, as I say, I use a fancy football format. So the whole idea is I provide a range of different ideas that people can think about in the mining space. So a range of gold and silver, different size companies. And I use what I call the bridge system to analyze them, which is looking at the balance sheet, the resources, the infrastructure, diversification, grade, and exploration potential. So what you're really getting is a sort of not only just a guide as to, you know, what ideas I like, you know, what companies I like, but also, you know, how to analyze them. And you know, the whole idea is that people, you know, put their own portfolio together that suits their own risk profile, and you know, they get some diversification into a sector they probably know little or nothing about.
It is not a matter of just picking them. It is a matter of knowing how to pick them with the correct information and the correct analytical skills. Simon, Popple, I'd like to thank you for joining us again on Silver Doctors.
Thank you very much.